Good evening, good evening, good evening. Welcome to StockAdda with Janak, Saturday night dhankibaat live stream. So hope me along with Puneet ji are clearly audible and very clearly visible. एक फटाफट shout out. Can we have quick confirmation in the comments? Rahul is here. Riva Shinde, big shout out and welcome to the live stream. Hope I'm clearly audible. Agar if you confirm, guys, then maybe we can start quickly with today's discussion and brief agenda. So just let me see if we have started. I think chalo. So Jay has confirmed. Thank you so much, Jay, and welcome to the live stream. So friends, today we have a very special session with a very special guest where we will be discussing advanced RSI strategies and more importantly, rather than RSI or Elliott waves or support and resistance. But the larger takeaway that we'll be looking today is by using one simple indicator of relative strength index, how can we understand in our thesis where to take entry and exit. So this is the build up of our previous session with Puneet ji, where he introduced us to the beautiful indicator of RSI. Today we will be building on it further. Puneet ji, who is with us in the live stream, as you can see it on the screen, is the founder of Gyanpath TradeX Private Limited. He has 24 years of extensive experience working alone with RSI and Elliott waves. Prior to finding his own academy, which is into full-time teaching people technical analysis and specifically into RSI and Elliott waves, he has been associated and has been a veteran in the mutual fund industry and have been associated with UTI Mutual Fund, ICICI. He was previously SVP with SL Finance. So Puneet ji, having said that, we have an audience and thank you for taking out time for today's live stream and really look forward to hearing from you. So main would really love to see how can RSI, the thought process of RSI can be taken further ahead and our entry and exits can be timed. What say Puneet bhai? Is it possible?
It is definitely possible. Thank you, Janakji, for introducing me to the wonderful public. Last time we did a session in Hindi. This time we're doing session in English. But I will ensure and I'll see that I make it very simple words so that everyone is able to understand what I am saying, and it should be communicated in a very layman language, which is understandable to everyone. So what we'll do is just taking ahead of the last session. So what we did in last session was just a quick brief. We learned a little bit about RSI, and we said that RSI, if someone learns, he can plan his trade, he can plan his investments. And though my website is still on the very first page, it's just beginning, and then we are trying to develop it. The only line I've written to that is that investment and trading both are different. And with the late RJ sir, he had a very good skill of managing his portfolio in a way he can trade also, and he was investor also. So I always used to say to my students and to my customers, everyone, that I trade in the stocks I invest in. So if you develop this kind of skill, so you can plan a little bit of ahead alpha about the stocks that you are holding. People can choose different ways, like they want to make long-term capital gains, short-term capital gains. But yes, once a trader is a lifetime trader, and I can't quit trading. So trading is in my blood. We used to do it like so many years, and this is what it is. So what I will do is we'll take ahead what we have learned last time about RSI. That is, the key to RSI is the divergence. So in any indicator you see, the divergence is the key, because divergence, if you find a quick price movement from there, because it's a kind of detour, it's a kind of break to the existing trend. So this is what we learned last time. But today what we will learn is we will learn is uh, how this is implemented when we are trading, and how we can take an advantage of this tool to plan our trades, to do a proper entry and proper exit. Though markets are supreme, nobody can catch them. But yes, there are some tools which can help you to determine your possible profits, to get possible profits, what you uh, can get in a trade. You can say enhance your profits and reduce your losses. So, what we will learn is this thing in today's session. So, I'll quickly do a little bit of briefing what we are doing in today's session in 3 4 slides, because that is also important. So, first thing is this RSI was actually a baby of Andrew Cardwell. He developed some kind of range rules for
Sir, you
RSI.
want to share me the screen? Let me know. I'll share the screen.
Yeah, we can share the screen now.
Yeah, and just a quick note. Sorry to interrupt, Puneet sir. We will be discussing few stocks as an example. Okay, they may not necessarily mean because in fact, none of them has to be taken as a recommendation. At the end, as Puneet sir said, markets are supreme. Okay, nobody is above the markets, and forget about any investor. Anybody can go wrong in the market. So please do not take any stock idea as recommendation. These are just for representational purposes. Kindly consult your financial advisor before any investment decisions. Yes, sir. So,
Thank you for making that disclaimer. That is very important. So,
hmm.
what we'll do is we'll start the quick presentation, and it's just a 4 5 slides so that everyone is uh, like on the same page what we are doing. So, can you see the presentation as of now?
Yes, Puneet sir. We
Okay.
are on the slide of RSI range rules.
So this is like range rules. Andrew sir actually developed this thing. So he actually developed the range rules that was, and he made something very much interesting, that is overbought and oversold zones. So he mentioned that if someone is taking an advantage of these two things along with the range rules, he can actually make some decent entries and decent exits. Now, what is this range rules? Now, this is what people know about RSI. So if you see, the normal rule that people know is 70/30. But what is the range rule that he developed along with some research work that I have done on my own? What I would like to share is, normally what happens, RSI is actually deriving between 0 to 100. It's a banded indicator. So we have everything in RSI has to move within that 0 to 100 band. Now what happens? uh, there are few ranges. If someone actually pays attention to these ranges and then identify the divergence, he can actually plan a very good entry and a very good exit. What are those? So usually people say that above 60 or above 70 it is a bullish range, and below 60 or below 40 it's a bearish range. But this is what we need to learn. So, a bullish zone defined by the masters was 80 to 40, usually seen at index levels, at stock levels, you can say. Bearish range was 60 to 20, but there are two ranges which people ignore most of the times. That is 80 to 95 and 40 and this 40 to 20. So what happens when the price moves in this range, the upper zone, upper range, the price movement is more fast than
Mm-hmm.
anticipated. And when the price goes, and when the RSI moves to this range, 40 to 20, the price moves down in a range which we will share with you guys with an example. And then you will learn that how this super bearish zone is a very good example where RSI will show that yes, the stock has been beaten down and this is the right time to buy, but still price goes down. And this is the biggest mistake what we do. So we'll share these ranges and with the examples and learn how this is important for us to identify stocks in these ranges, to identify the stocks in this discovery zone. Because most of the time what happens when the stocks are into 60 to 40 zone, people think that it might go into the bullish range or it might come into the bearish range. But this is a zone where most of the trades are stuck in. And another example of an RSI, what he used to do was a small RSI. That is a 3 day moving period. We'll also study that. Now, what I wanted to say is RSI is actually um, on a mathematical scale, it is between 0 to 100. 50 comes
Mm-hmm.
as a neutral point. And this will conclude that whenever RSI moves above or below this neutral point, it will change its approach mathematically. This is all about
Mm-hmm.
what I wanted to discuss with you. Now, what is that? 60 or 40? two ranges. Just see this one, 60 and 40. 60 plus 40 is equal to 100, or
Mm-hmm.
precisely if you see 66.66 and 33.33 is equal to 99.99 or round of 100. This is the main thing what RSI is. Bonus observation, what we can do is an addition to the normal RSI along with the small RSI, that is a 3-day moving average. With that, a combination of a negative divergence, positive divergence, regular divergence, bullish divergence, or regular bearish divergence. We can see that, and then we can plan our trades accordingly. This is what I wanted to study with you all. Um, I said that 50 is the equilibrium zone. So any price movement above 50 or any price movement below 50 will have an impact on the price. So let's say it's a stock that it is moving up in the 66 and 75 and 80 and a 90 zone. The price movement will have a greater impact. Whereas if it
Mm-hmm.
moves down, it will move other way. The price here moves up and here the price moves down. So this is what is all about RSI calculation. Now to go deep into this and to have real live market example, now we'll study how this can help us in determining the correct trade, the entry and exit. So what I will do is I will now minimize this and I'll close the screen and open a trading view screen. Can you see this trading view screen with me?
Yes, Puneet sir, I can see.
So
I can see you are tracking ITC, I think, today.
uh, we were discussing actually, so with some of the clients and students. So that was ITC. So what is okay? Before we start into this, let me just say, if someone is tracking RSI on daily basis, weekly basis, or monthly basis,
Mm-hmm.
so how we have to take trade? If I am planning my trade, if I am planning my chart on daily basis, I'm seeing my charts on daily basis, because RSI is actually based on a lunar thing. 14 days RSI. 14 days is a moon cycle period. So
Mm-hmm.
what we do is, if you have to plan your trade, just see, just go one time frame below or one time frame above to see that whether the study that we are thinking is planning or is happening on the same grounds or not. For example, I'll just share this screen with you. On 26th of August, I shared this chart. So as Janakji said, we are not SEBI registered. So as of now, just take it as a pinch of salt that this is not any recommendation, but it's just for the learning purpose. So this is what this chart was. And if you see uh, the chart that I have shown is was on the daily basis. Now I'll show you how we determined this price and how this actually played, uh, and how trader can actually take these kind of trades uh, in a right point at a right point. So if you now I'm going to a time frame, from daily time frame to 75 minutes time frame, a time frame lower than the daily. So if I go to the lower time frame, you see RSI was almost down. This black line is RSI,
Mm-hmm.
and
Mm-hmm.
this small line is small RSI. This part is small RSI, the lower
Mm-hmm.
one. This is a normal RSI. So
So
what
can
the
you quickly, sir, explain what do you mean small RSI and what are the settings for it?
so small RSI, what you can do is you go here on Trading View, type
Mm-hmm.
RSI. It will come up Relative Strength Index, normal
Mm-hmm.
one. So let's say this line.
Mm-hmm.
You go again.
Mm-hmm.
You change this RSI to black. That's just for my comfort level because I always use this RSI black. And then
Mm-hmm.
this is
Inputs.
SMA, and you go 3.
Okay,
And then you can change this to whatever. Okay.
got it.
So,
Got it.
so
So you are saying instead of 14-day averages, now we are looking at 3-day averages. So the changes are faster
we are looking 3-day averages also.
also.
So
Okay.
we look two RSIs. So we
Hmm.
look one RSI is 14 days and one RSI is 3 days.
Got
Now
it.
you might be surprised, or you might be thinking why I'm using these two lines, these on the RSI. So
Hmm.
now to go into that, what I will do is I will show you what I do on these lines. So this is actually an RSI. What Andrew used to use was 9 SMA, 9 simple moving averages, and 45 exponential moving averages. Now, if people are not able to know how it is plotted, I'll explain so that it is for benefit of all. Just type RSI. Okay, it's normal
Mm-hmm.
here. Go to normal RSI, change the RSI color black, come back. Moving averages, change it to 9. We are taking moving averages as red, 9. And then once this is plotted, right click here, add indicator. Type exponential moving averages, cross, go back. So we can go here. And if you see this one, EMA, we'll click here, go to inputs and make it 45. Go back here, change it to color whatever you want, green. Okay, now you see this is same as this. So I've
Hmm.
made you learn how to plot this thing. I'm deleting it.
That's quite useful actually. Now it will really help simplify a lot of things. Yes, Puneet sir,
So
please.
what he mentioned was like whenever the moving averages are crossing above the normal RSI, and whenever the moving averages are crossing below RSI, then a possible trade can happen along with the normal RSI, along with the divergence if we can spot, because that is the key to our studies. Plus, we also get an advantage of the small RSI. So small RSI is what? 3 days moving averages. Now, what he said, we have to consider overbought and oversold zones. So let's say in this example, I'll show you how we identify that if even if RSI is moving down,
Mm-hmm.
we should not take any trade just that RSI has moved below 30. Okay. So in this case, I'll just do the screen big of RSI and see here the level of RSI is 19 at this level. Let me just do this. See this. The RSI level is 19 and the price here was 79. But what happened to the price? RSI
Hmm.
moved here to 24 and price
Move down.
from 78 to it moved down to 63.
Mm.
So it is not necessary that RSI is moving down. You can plan your trade here. Why? Because why this happened. So this is the key why we have to study why this happened. Okay, so why? So if you see here, apart from the normal RSI, this is small RSI. At this point of time, when the RSI was lowest in this stock, for example, the small RSI was getting oversold. The oversold zone is below 20. The overbought zone for small RSI is 80 plus. So this was getting oversold. That means this is not the right time to take a trade. We might see some further fall. Same thing happened. Price moved down, price moved
Mm-hmm.
down. Now, if you see from here, this level, I'll just draw a line so that everybody is comfortable seeing it. Up to here, there was not much movement in the price. But if you have to plan a trade, where as a trader you will do your trade, You will do your trade once the small RSI is getting overbought. Now see,
Above 80.
above 80. Along with, if you see, the moving averages have also started going up and they have crossed over. Now, why moving averages? We have to see. We have to see the moving averages in a correct order. So, if it is 9, if it is moving up, so that means
Hmm.
9 should be up, 45 should be down. If it is
Mm-hmm.
moving down, vice versa.
Got it.
So, here the moving averages went correct this
Hmm.
point of time, and this was
Hmm.
the correct entry, not here. If you are getting this thing, stock price is down, leave
Hmm.
that on the table. We don't have to
Hmm.
see that. We
Hmm.
might see further fall also. But here we got first indication that something is changing in a stock, and here an entry can be planned. Similar example you can see in State Bank of India in the 2020 fall.
So
Now
there
I
is Puneet sir. There's three interesting, in fact, learnings that we got from sale. Example, very interesting learnings. First, we need not try to catch the absolute bottom.
never try to buy the falling knife. Never.
Second is have patiently and wait for the crossover of moving averages. And
And
three, use the tool of small RSI basically in the overbought zone.
that's correct. That's correct. Now, here I'll show you another example, and then
Hmm.
it will be clear to all of you
Hmm.
why this small RSI and moving averages game is important.
Hmm.
Now, see, what is this? This is the lowest RSI. Let's make it big.
Mm-hmm.
Here, the RSI is 16, 17, 17, we can say, okay?
Oh, got it.
What is the price? 201.
Fair
What was the
enough.
low? 150, almost 140 at 140. What just we are doing it
Tw-
round off, right?
25% correction even after that.
50 rupees down. Just
Yeah.
imagine for a retail trader like us,
Hmm.
boss, it's very difficult to digest 50 rupees. It's very difficult,
Wipes
believe me.
of confidence. Literally wipes of confidence. You won't literally
Even
come
if it
back.
is a company like State Bank, you will lose your confidence. Even
Yes,
if it is a
absolutely.
company.
Hmm.
So what happened? RSI
Hmm.
was down here.
Hmm.
What was happening? Small RSI was getting oversold.
Hmm. Hmm.
What happened here? The first instance, it started getting overbought here.
Got it. Got it.
So
Yes.
now you got that something is happening and the
Hmm.
moving averages also went in a correct order.
Hmm.
So your trade was at 170 to 180, these levels.
Yes. This sounds pretty
Another
simple, but very effective. Yes.
another example. Now what happens if this RSI is, let's say, small RSI is above 95? You
Hmm.
saw that in the presentation I said that 80 to 95 is an accident zone.
Hmm.
So why I said that as an accident zone? As a retail trader, for me 10 rupees to 15 rupees, retail trader I am saying, trader, not an investor. I've
Hmm.
mentioned these two things differently. For me 10, 15 rupees, 20 rupees is a very big thing. I'm a retail person, okay?
Hmm.
So what happens here? This point is 95, okay? This moving averages now is getting crossed over here at this point. This was the top,
Hmm.
and see, it came down here but it didn't got oversold. So that
Hmm.
means the stock is still in positive hands. It's a correction, and we should take it as an opportunity to re-enter. Or if we
Hmm.
have missed the bus, this is the time to re-enter if it is not getting oversold.
Hmm.
But where you will get your entry? Not here, not here, not here, not here. We'll wait for this thing.
Hmm.
If this money is left on the table, leave it.
Hmm.
If we leave some money on the table, doesn't matter. But
Hmm.
the thing is, we should plan it correctly as more as we can. So the correct thing is, whenever this is getting a good crossover and it is moving up, and we are seeing that the bigger RSI is also on a stronger note. It's getting in a different territory. Then only we can, or we shall plan our trade. Moreover, if you see, this was for the risky traders because the RSI was still not in a buying zone, because it was trading in a zone between 40 to 60 here. If you see this zone, I'll just see this zone. So this RSI is 55, this is 27. Okay, let's increase it 60. So here RSI has changed at this level. Now it is going in a different direction. But is this trade a trade for you? Yes, it is a trade for you. But what I mentioned earlier was,
Hmm.
if we are doing these kind of trades, we also have to spot the divergence, because divergence is the key.
Hmm.
So how you can spot your divergence? You see on the charts where you can see your divergence. If divergence is there, entry would be quick. See, no proper divergence here, a small divergence here, you can see. This is going up. Okay, let
One
me make it,
divergence.
yeah, let me just make it clear, because many people who are new to this kind of divergence, they might not spot it correctly. But now if you see, this will help you. Okay, now you see, I'm just making it clear. This is moving up, this
Hmm.
is moving down. So this is a divergence.
Hmm.
So here now you can see there are several divergences. This was not a divergence because this is moving up. I think so. This is also moving up. But from here onwards, we can see that there is some movement that is happening.
Hmm.
So from here, actually the traders will take it into their notice, and then they will plan their trade. So this is how I wanted to tell you that the range rules are very much important. Uh, I'm just going back to the presentation for some people's comfort. What is range rules? 60 to 40 zone is a frustrating zone. Believe me, it's
Hmm.
a really frustrating zone for traders. For us also, it's a very frustrating zone, because we don't know that what will happen to the stock. It can stay here for long. There are many stocks those have stayed here for long.
Hmm.
In past, like when the markets fell down, like from 18,000 the top, and till May and June, from, I would say, from the period of March, not March, April to June, there were many stocks those were trading into these zones, going up down, and most of the stop losses are hit in these zones only, because you don't know, because this small RSI will, once it will get overbought, and then it will get oversold. So you will not get confidence in your trade that what is happening.
Hmm.
So with these kind of situations, it's not necessary to do trades all the time on the screen. Leave it.
Hmm.
Less
Hmm.
trades are good trades.
Hmm.
Okay. When you are comfortable with your zones, that it is going to a positive zone, and when you are comfortable with the um, like the zone below, then only plan your trade. Second thing, you see that you are getting a divergence or not. Third thing
Hmm.
is this important thing, that is the overbought and oversold zone. If these three things are planned, then you can
Hmm.
actually make a correct entry and a correct exit. Now last time, I think so, we discussed about how we can plan our trades, how we can plan our targets according to the divergence. So I think so that has been very much clear to the audience. So this is what I wanted to communicate, and let's uh, ask anything if someone
Yes.
wants to ask.
So
Yeah.
we spent good 30 minutes understanding our entry and exit. And in fact, it was really great to see how how with such ease you combined three different things in one indicator and timed our entry and exit. So now, if you now the friends, the forum is open for Q&A. Okay. Uh, Maybe we can take up your queries against RSIs or other indicators, even from previous sessions. Maybe if you want to see a couple of charts, we can see that. So, Puneet, by one question that I have got over here is, any reason why you chose 5 and 45 specifically in your moving
I
averages?
if I chose, I'm sorry, I chose 9 and 45.
9 and
Um,
45. Hmm.
if by mistake I've done 5, then I'm sorry. It was 9. So if anybody is not clear, I can show them again. So
So, Puneet sir, the larger question I think over here
hmm,
is there some rationale, or is it because it is a popular thing that we go with the herd in like most of the technicals? Is there
so
some rationale behind selecting even 9 and 45?
the rationale behind that is I'll explain you what I have learned over a period of time practicing it. I practice it on 10 and 50. I practice it on all the moving averages, like small moving averages, different using different time frames. But this was one
Mm-hmm.
of the most accurate averages, and we used to use it quite well. Now,
Hmm.
why this was used, I'll tell you a
Hmm.
little brief about that. What is moon cycle? Moon cycle is 14 days, right?
Hmm.
What is the trading cycle? Trading cycle is 5 days, correct? In a
Yes,
week.
sir. Hmm.
So what happens in 2 weeks? 10 days. So I'm taking simple moving average. Simple moving average, if you see the definition, it
Hmm.
takes, uh, if you just Google it, you'll find, let's not go into the moving averages definition.
Hmm.
So I've just taken, so that's why he took like 1 day moving average less than the normal trading cycles, and he took 45 days in that exponential moving averages. Exponential
Hmm.
moving average, there is as such nothing that has been defined by him. But if you uh, uh, go to a like maths, so what happens, you have 5 trading sessions.
Hmm.
So 5 trading sessions into 9, that is
45.
the SMA, that comes
Hmm.
45. So that's a rough calculation why we use this, and it works absolutely good. Why this 3 days? Answer to that is, um, in a week there are 5 business days, like 5 days you do trading. So 3 is a kind of more than the average that is actually required. So that's why we use these two.
Got it. Got it. So another query that we have Puneet sir over here is English with Jindal sir is asking,
Hmm.
should we book profit if the RSI is above 75 and exit? Is it the right way to think?
No, no, Jindalji, this is not the right way to exit or right way to plan. But actually, what happens? Look, RSI is a banded indicator, 0 to 100. That what I mentioned is, if you see 33.33 and 66.66 makes 99.99. Roughly, we can say 60 and 40. So what
Hmm.
happens? You are in a range of 75. So you are in a
Hmm.
bullish range.
Hmm.
Now, what happens? The price movement above 66.66, above this range, will be fast.
Hmm.
The price range below 33.33 will be fast. RSI movement above 66.66 will be slow. RSI movement below 33.33 will be slow. That is what we learned. We
Hmm.
learned in an example of sale that price movement was fast, RSI movement was slow. इसको let's say we'll just say it in Hindi, पिटे हुए को क्या पीटोगे?
Hmm.
So RSI is already at the bottom. You
Hmm.
can't make it more like down because it's a banded indicator. Now what will happen is more fluctuation or more things you will see on the price only.
Hmm.
RSI will behave between 0 to 100, right?
Hmm.
So this is how it happens. And Jindalji, if you want to see that, I have shown it in the presentation also. 75 is a bullish range. The movement of the RSI on these ranges will be 1 point, 2 point, 3 point, vice versa, like it's going 4, 5, 6, 7, 8, 9, 10. But the price movement at these levels will be fast.
Correct.
So what happens? we as a retailer think that 70 is RSI, sell.
Hmm.
But then what happens? We crib.
Hmm.
Why we did that?
Hmm.
हमने बेचा दाम बढ़ गया. Why?
Hmm.
Because the movement of RSI will be less from 70 to 80, 85, 90. It's just 20 points. But here the price rise will be more.
Hmm.
Because if you have seen in that presentation, it moves three times, four times the RSI. That is what I wanted to say.
So, in fact, Jindal ji, I would like to add a very good example here. While Puneet sir was just explaining us, this came to my mind. Think of RSI like a rubber band, which is stable at 50. Okay. Either ways, when you try to extend it in left or your right to the extremes, as you move towards 100 and 0, it will require extreme price movements. Okay. So this is one very good anecdote of RSI that came to my mind. Also, when you just simply look at 75, okay, forget about the divergences or anything, just use a simple logic. If RSI, when you see it is above certain threshold or it is closer to 100, no, you will see many strong bullish movements. So just do not simply take a call that if RSI, do not have a blanket rule that if RSI is greater than 50, then we can exit. No, there are other things that you need to consider before making this call. This is what essentially Puneet Bhai is trying to enforce or share his experience with us. Yes, Puneet Bhai. So, in fact, now there is another interesting question by Jay. Okay, I think we might have answered this partially in the last session, but still, if you can help us. Today, the strategy that you discussed, okay, how would you screen stocks for this? How would you identify the stock to choose?
Look, if you ask this question to many traders or people who are doing this job, believe me, I still do it with my eyes. Like, I don't use any screener or anything. But
Hmm.
what you can do is, I think so, you can go into charting or some kind of software or even in trading view, just see what stocks have RSI daily above 60, weekly above 60, and monthly above 60. So when all the time frame RSI is above 60, that stock is somewhere in a bullish range. If the RSI is below 40, that stock is in a bearish range. So this is the basic screener what you can do. But if you learn this, that
Hmm.
you have to trade stocks, those are monthly above 60, weekly above 60, or daily above 60. So you'll not find this copyright thing that all three are all at 60. So some would be 80, some would be 65, some would be 70. You'll find like these. So then you have to analyze it on the charts what is working. So let's say a trend is on the upper side. Let's say the monthly RSI is above 70.
Hmm.
That means the stock is in a very good trend, because the biggest RSI on the bigger time frame, it's on a very good note. Then you move to the smaller time frame, that is weekly. If it is above 60 or 66.66, wherever you are comfortable identifying these kind of trades, then you can say that yes, this time frame is also good. If the small RSI, like within these three, that is the daily RSI, is somewhere near 55, because you'll not find identical things like everything is above 60, copyright all 60, you'll find it different, right? So if that RSI is moving, let's say above 60, 65, 66, 70, then retracing back to 60, that means, and the bigger RSIs like weekly and monthly are still on a positive zone, they are on a like 60 plus 65, 70 plus zone, that means it is bouncing, or it may bounce from the daily RSI level 70 to 60, and it may bounce back if you are getting a proper crossover or it is resting on the crossover. So that is an indication that if other things match, for example, you're getting some kind of divergence, or the small RSI is getting overbought, it's not getting oversold. So the key is here, it's not getting oversold also. That means it could be a possible entry for a trader.
Got it. Jay, how I will approach this entire situation is, while today, see, when you play cricket, no, there are different shots. There is hook shot, there is pull shot. Okay, when you see a chart, no, you have to see कि मुझे ये बॉल पे कौन सा शॉट मारना है. Okay, so need not necessarily let every stock that you see will satisfy this condition. But maybe if you know certain more indicators which you have learned over time and acquired over time, and if you see your stock is fitting those criteria, you can use them. There, for everybody the strengths are different, for everybody their preferences are different. Today we have learned one very interesting skill, but in our entire strategy, how does that fit? This is up to the individual retailer. That will only come to you with experience. How do you screen stocks? Either you can look for same on Twitter. Okay, I scan a lot of charts. In fact, some of the ideas which Puneet ji shares on his Twitter handle, I see those. See, go and verify them, that do they fall in my comfort zone. Okay, I see other forums. I see at in.trading view where there are various blogs written on blockouts, and verify it myself, and then think, should I be taking this or should I be staying away? So this is how even I personally screen. While charting is a good tool, but there is a lot of just scanning that I do. And in fact, Puneet ji put up very beautifully, वो वक्त के साथ ही आएगा, that is experience, that his eyes can spot, which will come to us with lot of experience only. Yes, Puneet sir.
Yeah, it's right. Like you do a scan, you take help with the scanners, but it will be like over a period of time, your eyes will actually, you'll see the chart and you'll tell that, okay, this is the chart I should pay like more than 2 minutes or more than 5 minutes. Then you can do your further study.
Yes. So Puneet sir, there is a question. Okay, any comments or uh, just a second. Huh? So there is an interesting question put up. Adani Port. Adani is one of the famous stories. Can you quickly glance for us Adani Port and see, are there any interesting developments?
Adani ports.
Yep.
Okay.
I just share the screen. Yes.
This one. So there is a PR there. So if you see this, so look, I am making this because I, you give me another stock, I'll find it immediately because my eyes are set according to that. But
Hmm.
it comes automatically when you practice. Now, if you see what I have done is, this was what higher high,
Hmm.
this was what lower low, this is
Hmm.
going down. And
Hmm.
what we learned in last like session about divergence, if you just don't mind, I'll just quickly share that thing.
Absolutely, sir. Yes, please.
So
I'll just
this
take
is
away
what
the question.
we learned
Yes.
last time, right? The
Hmm.
price is moving this way, RSI is
Hmm.
moving down. So what is it? This is, some people call it hidden bullish divergence, some people call it positive divergence. So what is that? Hidden bullish divergence, price continues in same direction. Hidden bullish divergence, price makes higher low, that is price makes higher low this point,
Hmm.
and the oscillator makes this one
Lower low.
lower low.
Yes. In the
PRR
opposite
effect,
direction.
that's
Hmm.
right. PRR effective and securities in bullish zone, and PR is the best way to spot is between 80 to 40, right? So let's go back and I'll just show you. So where this has happened, okay. Now, if someone is not comfortable, do this thing. See where it is happening. What is this? This is above 50, 55. So that means
Hmm.
it's in the bullish zone, right? And
Hmm.
what we do here is same thing, copybook, what we have seen. Now, another thing what we can see is this is not getting oversold.
The small RSI.
Yes. So
Hmm.
there is strength left in.
Hmm.
See, now what is this? Inside bar.
Hmm.
So this will help the stock to move up. Now, what gives us more opportunity to buy? So this is again retesting its 95, 45 days moving average here. So this was
Hmm.
green line was 45. If you click here Uh, if you click here, that was 45, right? So this
Hmm.
is testing that. See this? This is testing this one. So what happens? Another thing to learn. Okay, if this point is there, we can learn another thing. Whenever the moving averages are moving away, you see the price movement. The moving average is here, moving
Hmm.
apart. Both are moving apart. The price movement is going up. Now
Hmm.
here, what is happening? The moving averages are contracting,
Converging.
right? So
Hmm.
what will happen whenever they are near?
Hmm.
Like both will meet together, or are about to meet, or in a very like contracting position, there's some kind of movement might happen, or they are like this for some time, so there
Hmm.
is no price movement. So those things have to be relooked by a trader. So if you see this zone, what happened here? The moving averages are almost like both are very much near, but what's
Hmm.
happening? Neither it is getting overbought, here it is
Hmm.
getting oversold, so you are seeing the lower lows, right?
Hmm.
But here
Hmm.
again it's changing. Here it got overbought, here the moving
Hmm.
averages are moving above. So
Hmm.
this is how you plan your trade. Now you again have to
Got.
spot the divergence. So divergence, where you will spot the divergence on the range rules. So if that is
Hmm.
going through, so this is good. This shall do well. I think so in this one. This
Got
shall do.
it.
Now where you have to trade. Now this is
Hmm.
important thing. So let's say that was a daily chart. It's converted into the one time frame lower. So for a trader, let's say I was using daily. Now I'm using 75. So at this point of time, this one, I might take my trade because this is moving up, right? This is
Hmm.
giving me a crossover. Now, if I see 824 is my price, right? I'm
Hmm.
converting here. Should be somewhere, things in this one. Let's convert it. Let's shift this one. This is 23rd of August. Okay. So where is 23rd? This one. So I might have taken my trade here.
Hmm.
Right. So what was my stop loss? My stop loss was this thing, 806. Right. So this is how you plan your entries. So on a
Hmm.
smaller time frame, you went, you check that
Hmm.
you're not getting oversold, and then you check when the market closes that yes, it is not getting oversold, and then it's moving up. So if in this case it keeps on moving up, like it's getting overbought, that's fine. Stock is good, doing good. If it's getting oversold, like these regions,
Hmm.
so then it's a like point where we need to revisit our trade.
Hmm. Got it. Got it. So yes. So Priya Brata is asking what should be the exit strategy in RSI. I think we'll discuss this today. Okay. So anything that you would like to highlight? How would you plan your exit? Maybe some example.
Okay, let's move back again to the charts.
Hmm.
So let's say in this case,
Hmm.
okay, let's do it big, then people will understand. So what happened here? This is a daily chart.
Hmm.
So what happened here? This RSI is crossing down. See this point? I'll mark it so that everybody can see and learn from it. This point. Okay. And we'll do this thing. Now what happened? What was this RSI? See again. This point was 97. What I
Hmm.
mentioned. Now these small RSIs will very much like you will see frequently getting overbought 80, 85, 90 like this. But
Hmm.
this was above 95 here. So
Hmm.
something would have happened. We can assume that some
Hmm.
accident can happen here. This started giving a crossover here.
Hmm. Hmm.
Now I've marked this line. Now see this
Hmm.
thing. I'm just moving it one down here. So if this was there and it has started moving down, what was the price movement? From 808, it make a low of 779. It looks very small on chart, but for a retail trader, boss, it's 20 rupees, 25 rupees. We can't bear this. So as an investor, it's fine, right? I'm
Hmm.
I'm I'm holding this stock, let's say from these levels, I'm holding this stock, fine. But for
Hmm.
me, if I am a trader, this 20, 15 rupees matter a lot.
Hmm.
मेरा बैंड निकल जाएगा. I can't do. So this small RSI actually plays a very vital role when one is trading. Now what happened? If you would have seen this thing, if you can't plan your trade, let's say at this level, what you would have done? You would have actually shorted here, or you would have booked profits. So see,
Hmm.
this thing is also matching. So it actually made a cross down from the 9 days moving average.
Hmm.
Simple thing. Look, if we have to complicate things, it will be complicated. If you want to make
Hmm.
it easy, make it easy. The only thing is, uh, you make things easy, but you don't lose a step. You follow the rules. If you are disciplined in your trading, you will get money. That's
Hmm.
for sure. But if you are
Hmm.
just fighting or like running at the greed thing,
Hmm.
paisa banega, it's not, it doesn't happen any day, and nobody can
Hmm.
plan the 10 out of 10 trades. Even when I
Hmm.
am doing, if I am doing 6 trade or 7 trades good, I am a genius.
Hmm.
RJ sir said very much clearly, if he is getting 15%, he's a king. He's getting
Hmm.
18%, he's a emperor. So 10% is fine. So just take thing with a pinch of salt. Your term deposit or the FDs are giving you 7-8%. Here in Australia, they give like 2 to 3%. So, but in
Ah.
India, they give like 7 to 8%. So if you're
Hmm.
getting 10%, the returns in 2 digits, it's good. It's fine.
Hmm.
Nobody can
Yes.
plan 10 out of 10 trades.
Correct. So, before we move on, I would just like to share with participants one thing. Okay, just hold on. Let me share my screen for same as well. Okay, I think my screen is clearly visible now. Yes. So, just an update for our members. Okay, on our channel, as you can see, uh, we have our own community of join button. Okay, where I'm creating a closed community of people whom we share such ideas both fundamentally and technically. So yesterday we discussed an agrochemical stock. This video is live where we have discussed about an agrochemical compounder fundamentally for long term. Okay, along with this we have spoken about a tech multi-bagger, hidden banking stock. So we are every month we discuss one idea. So for joining same, you can look at join button and explore our deep dive memberships. Okay, apart from this, if you see the community tab over here also, we keep posting members only exclusive post. For example, let me show you. Look at this. This is just hold on. Yes, so today Puneet sir discussed about Ambuja, and this is, look at this. 2 days ago we have done technical analysis of Ambuja cements and how the entire flag and pole pattern is being developed here. As you can see, just hold on, it should come up in on your screen. So this small nuggets of technicals and fundamentals we keep sharing. So definitely you can explore join button and be part of that closed community. Would love to have you on board. Yes, Puneet sir, so that was one small update. Yes, just hold on. Now let me stop the sharing. So Puneet sir, now I have one query over here. Okay, as a beginner and an enthusiast in technical analysis, how would you suggest somebody to go about it? Does one refer books? If you are supposed, so Mike, let me make it more simpler. If you are to start learning technical analysis today, Puneet sir, how would you do it?
Okay, to be very frank, let me go to the history. So
Hmm.
if you are Eklavya, you can't be a good person. You have to be Arjun. You have to have a teacher. So
Hmm.
reading books won't help. So someone,
Hmm.
yes, this will help because that makes you learn quicker, learn faster. But yes, you
Hmm.
need to have some. guide with you
Hmm.
that will make you understand these small things. So when the book will say, okay, at these levels you have to buy, these levels you
Hmm.
have to say, they will show a simple chart, what
Hmm.
is posted. But what happens to us when it is a live market?
Hmm.
When there is money involved, बस हाथ कांपते
Hmm.
हैं, right?
Hmm.
So either you make losses then, reading just reading through the books and just doing the trade. So get a proper mentor so they can guide you. I personally, what I do is I take examples, I take help with RSI, and I also take waves. So the bigger trend I analyze with the waves, and the smaller trends, to ride those trends I use RSI. Along with that, in the last session we covered that we also see, we have learned the divergence last time. So we if you remember, we did that IT sector is having the triple, like
Hmm.
multiple divergence, and see how it
Correct.
performed. We also
Correct.
saw that some stocks will work and some stocks won't work. We
Hmm.
analyze it through the ratio charts. So if
Ratio charts.
some people wanted to learn that, they can go refer that video. So that makes you more handy with the things. You can
Hmm.
see these kind of educational videos, you can get yourself trained, you can learn books, learn through books. But a mentor is definitely required. You will only learn, you'll recover faster, I would say, because mistakes is done by everyone. We also do mistakes. The only thing is that maybe I do 6 out of 7 trades, good trades, sometimes 8. But if there is no proper mentor or no guide, this ratio might have been like 2 3, and that is not good. So that helps. That's what I can say.
Got it. Nice thought. uh, अकेले चलने में क्या मजा है, बेसिकली साथ लेके चलो किसी का,
Yeah.
सफर आसान हो जाता है.
Yes,
Uh,
yes.
so again, closing question before we wrap up the session. So this week we had some Jackson Hole symposium as well, where the outlook turned negative. Can you show us in charts and Nifty, what do you think our outlook in the immediate short term can be? I'm not asking you for Monday because markets can go anywhere. But what are the technicals saying, like when you look at ultra short term?
We are good. I don't think so any problem. Market will surprise everyone. We are good.
Market is going to surprise us.
Yeah, we are good.
Chalo, so this is music to my ears. A perennial bullish investor.
नेट में वी से ना, नेट में सबको ऊपर जाना है, तो दिस इज द थिंग. तो आई थिंक सो
ऊपर जाना
निफ्टी
ही
हैज
है,
टू
हाँ.
गो. No,
Yes,
it's good.
absolutely.
I think so. It's good on weekly basis. This is a worrisome candle, but
Hmm.
I don't think so any problem, because on weekly basis, if you see,
Hmm.
yes, we are getting overbought here. Abhi to we can't say that we might get oversold or not. But if it is not getting oversold, then it's fine. On weekly basis, we are somewhere near 58. RSI is somewhere near 58, and monthly basis is what? We are almost nearing the moving averages. As such, no problem. I don't think so.
Sir, on the
We'll continue
weekly
to rise.
on the weekly charts, don't you think that three tops can be a cause of concern? The failure to break them on the weekly.
You're talking about this.
Yes, yes, the three tops that we are seeing, and the fourth one that we did not. Yes, yes, I'm talking about that.
Ignore it. Market will rise.
Chalo, done. I think that I would really love, but maybe just some. So that is anybody's guess. But yes, whatever limited experience. So just hold on. Let me stop sharing the screen.
You
And
might see
so,
some corrections. Look, this is, if you even notice that it
hmm,
on a weekly basis we are into wave 4, let's say, on the weekly
hmm,
basis, but still there is some gas left out. I think so.
hmm.
In a month or so, we'll be seeing some good highs.
Chalo, great.
This might be a
So
correction.
yes. So thank you, Puneetji. I think we have completed 1 hour of scheduled time as well. Uh, I'm really grateful, and in fact, on behalf of the forum, let me thank you. And Puneetji, any closing thoughts? How was your experience?
It was all good. I'm always happy to tell people what I have learned. If you
Thank
have any
you.
queries, you can reach out to Janakji. I also have Twitter handle. You can ask queries to me also if I'm able to answer that, and you can post queries through Janakji also. So I'll be happy to answer all these queries. Whatever I have learned, and keep learning, because learning is the key. Learning never stops. Even these days also I learn. I learn a lot. I read books a lot. I still have mentors,
Hmm.
so I still learn. So learning, even I would like to say, after like playing cricket, 10 making 10,000 plus runs, one day Sunil Gavaskar was asked, uh, what about cricket? So he said, I'm still learning cricket. So this is what happens. So you're still learning, you're on the learning phase. So keep learning and keep earning. That's the key.
Great, sir. So thank you, Puneet ji. With your permission, now I will close the session. Thank you, everyone. It was great having you. Until our next live stream, till we meet next time. Jai Hind, friends. I'll see you around.
Thank you.
Thank you,
Thank you,
Puneet
sir.
ji. Chalo,
Thank
so
you,
I'll
everyone.
sign out.
Thank you.
Yep.
Yeah.